So Robinhood's back at it trying to make some upgrades to their platform, and they just dropped the new retirement feature. Yes, it's for all of you who would rather invest your hard-earned money into safer stocks and ETFs that can grow over time, rather than buying zero-day expiration option contracts on your favorite meme stocks. Well, then this is the video for you. So you've probably either gotten an email, seen a notification, or if you've logged into the mobile platform or you've logged into the web platform on Robinhood, you've probably seen this retirement section. And in today's video, we're going to kind of dive deeper into what this is all about, the features of this, and one of the biggest, takeaways and the biggest, marketing points that you're going to be seeing is the match, the only IRA with a match. As of right now, you have to enter your email in to get on the list for early access, but just like all the other platforms out there or all the other features that Robinhood has added to their platform, everyone will pretty much get access to this at some point in the near future. It just comes down to how bad you want it and how early you want to get access to it at the end of the day. Now, in an IRA, there's actually two types of IRAs that we can actually build and create with the Robinhood platform, and that would be the Roth IRA and then the traditional IRA. We'll cover the math in just one second, but what an IRA does is it gives you tax advantages. So when you're using a Roth IRA, you're essentially going to be investing money that you've already been taxed upon. So let's say you're working a job or whatever, your income, and then you take that extra couple bucks or extra couple $1,000s a year up to about $6,000. In 2023, those numbers are going to change. So if you're under the age of 50 years old, you can actually deposit over $6,000. Now, $6,500 per year into your IRA. So these are capped. And then when you're over 50 years old, you can actually deposit up to $7,500 per year into your IRA. That's like your max contribution. And yes, you can have multiple IRA accounts across different platforms. Webull, Robinhood, TD Ameritrade, Fidelity, doesn't matter. You can have many platforms. You just can't go over that $6,500 threshold into next year or $6,000 here in 2022 if you're watching this video late this year. Don't want to go too deep into a traditional IRA versus a Roth because that's kind of for a different video, but essentially a Roth IRA, you're taking money that you've already been taxed upon, putting it in and not having to pay taxes on that even when you take the money out later on. If you take it out before your retirement age, then what happens is you're going to end up having to pay fees and whatnot on that, which is kind of unfortunate. But if you don't and you wait, this kind of money can compound big time. And a traditional IRA is another tax advantage account. And long story short, you'll be paying some taxes on that money later on, but there are some advantages in terms of deductions now if you're depositing into a traditional IRA. So we covered multiple accounts. You can have multiple accounts, but what about this IRA match? Like, what is this all about? What Robinhood is really going to be selling this on? So as of right now, if you max out your Roth IRA and you put $6,000 in, they're going to match you with 1%. Well, it doesn't matter what you put in, but if you were to max it out, you're going to get $60 as they're advertising right here. And that means you're going to get paid that 1%, and Robinhood will be the ones to match it. You don't need to have an employer match it. You don't have to have a job. It doesn't matter where you're working. None of that stuff matters. It is Robinhood that's matching as long as you open a Roth IRA or a traditional IRA with Robinhood and then deposit money in there, they will match you no matter what on those deposits, okay? And that match does not count towards your deposit amount. So if you were to deposit $6,000, let's say in 2023, deposit $6,500 over the course of that year, they're not going to count the extra $65 that they're going to match you towards that threshold, towards that max contribution. So you can still deposit up to that max contribution and then get that additional $65 that Robinhood is going to pay you. And that money should be available pretty quickly to utilize and to now invest in whatever you really want. A couple other things that are really important to at least point out. What's really useful about this is that they have this portfolio builder feature. So they're going to allow you to customly, or they're going to give you custom recommendations. So you'll have to go through a little questionnaire, and then they'll give you some custom recommendations on different ETFs, different portfolio types. It'll be a couple ETFs, a couple stocks that you'll essentially hold, and be kind of depending upon, your investment style, like how old you are, depending upon how aggressive you want to be, that's how you'll be able to kind of pick your portfolio. And I would highly recommend that if you're someone who doesn't care about following things and just wants to put money away, it's not a bad idea, because a Roth IRA is one of the best things you could do as someone who, let's say, is younger than the age of 50. It's one of the best decisions you're probably going to make when you do retire or later on in your life, because of those tax advantages and because of the compound effect. But of course, you can invest into whatever you want, and they're also coming out very, very soon with options. So depending upon the platforms you use, some or most platforms that have been well developed, you can buy options in a Roth IRA. Webull, for example, one of Robinhood's like substantial competitors as of right now, allows you to do that, and you can actually just actively trade just like a cash account in the Webull account. I would imagine that you're going to have very similar features here on Robinhood, so that's coming very, very soon if you wanted to leverage options in your Roth IRA. Now, I want to get into that here in just one second, but let's talk about the coverage, and then we'll talk about the pros and cons about trading in an IRA and what you need to know. Now, before we continue, we want to give a shout out to today's channel sponsor, Chart Prime. Chart Prime is an awesome trading suite, algorithm, and community all baked into one. With Chart Prime, you get access to some incredible trading tools like automatic pattern detection, unique indicators, trading signals, and even a Discord community centered around trading education and building profitable traders. And don't just take my word for it. Here is a look into some of the recent member profit posts, and you can see that members are banking off of Chart Prime, whether that's the automatic patterns to build their trading plans, indicators, or even some of their awesome signals and analysts who post trade ideas. Their indicators integrate right into TradingView, which makes it super easy to analyze your favorite charts, whether it's stocks, crypto, really you name it. Although many of the trading signals and the analysts in the Discord do focus on crypto trades, there's a ton to work with here. And I'd say that my favorite has to be the automatic pattern detection, whether it's indicating different technical patterns on the charts or that's candlestick patterns. It really helps eliminate a lot of the time that it would take to do your own technical analysis, and you can have essentially a bot, a system, an algorithm do it all for you. I will leave a link in the video description box down below if you want to check out Chart Prime, sign up, and get in on this action right now. They've got countless tutorials, webinars, and even live trainings that they run all the time that are meant to help you and cut down on that learning curve, giving you the best chance of success. Seeing all this and the community firsthand gives me a lot of confidence that they have your best interests in mind, and they want you to be able to capitalize in all aspects of trading, long, short, it doesn't matter. Again, I'll leave those links in the video description box down below and get started right now. They have account protection SIPC coverage up to $500,000. This is one of those things, especially what's been going on in the crypto space, that you probably want to pay attention to when you have your money invested, or let's say a substantial amount of money invested into any platform. And as time goes on, as you compound, let's say you get, as you progress through the years and your investments and your careers and you're depositing more money or you have more money to invest, this becomes a lot more important, okay? So keep that in mind, and that's actually a good sign, at least as of right now. One last thing before we talk about the trading aspect, you will be able to roll over old retirement accounts, 401ks, 403bs, into a Robinhood IRA. That is something you'll be allowed to do. Okay, so let's talk about the trading, the pros and cons of trading in a Robinhood or really an IRA in general. So one of the biggest things that you'll kind of realize, and as you start to kind of ask those questions and think a little bit deeper, if you are someone who is into actively managing a portfolio, actively managing your money, or actively trading. So you'll realize that, hey, if I have money in an IRA and I can compound that based off of my own trading or investing strategies and beat the markets every single year, or compound it at 20, 30, 40% every single year, dare you say even more if you've had a couple of great years based off of the volatility of the markets, that might get you thinking that way. Yes, like you can do that. And the tax benefits are awesome, right? Because if you learn how to trade and you were able to trade successfully in an IRA throughout the course of your lifetime, you can compound potentially so much faster if you were to beat the markets, which again, a very small percentage of people can consistently do, but you will have that much more money left over sitting in your IRA by the time you retire. And if it's a Roth IRA and it comes tax time, or it comes time to pull that money out, you don't got to pay any taxes on that, because the Roth IRA essentially assumes that you've deposited money post-tax. You've already been taxed on the money that you're depositing into the account, and then you're making your own decisions and trading and investing as you will. The cons obviously are, if you are not successful in this, you can end up really hurting the compound effect. And what we've seen and what we know throughout the compound effect, if you just sit back and let your money compound at an average of 5, 8, 10, 12% roughly per year. The stock market returns 8 to 12% or so per year. If your money just compounded even on the low end of that, and you started in your 20s or even 30s, you will be sitting very, very pretty, especially if you're maxing your Roth IRA out. You're getting those matches from Robinhood as well. You're going to be sitting very, very pretty by the time you retire into your 60s, technically, that's when they were allowed to pull the money out of your Roth IRA accounts. Technically, the age is 59 and a half if we're going to be specific as of right now. But you're going to have, right, obviously a very nice nest egg sitting there if you just compound at the market rates. And if you don't, you can kind of miss out on that. So there's obviously a risk reward there. It really comes down to how you feel and how you want to handle things. I would recommend that if you obviously have experience trading on, let's say, a different account or a personal account, and you want to bring some of those strategies over to the Roth IRA, it might be worth doing so on maybe $1,000 per year, or let's say 10-20% max of the overall portfolio or the overall size of the IRA if you so choose. But it's probably safe to say that if you were to just sit back and pretty much put your money into the S&P 500 and just consistently put money into the S&P 500 and consistently maxed out your IRA contributions, you really don't have to worry very much, especially the younger you are. You're going to have a lot of money sitting there waiting for you when you hit 60 years old. Leave any questions, comments down below. If you guys want to check out Robinhood, there is a link down below in the video description box, I believe, for Robinhood if you want to sign up if you haven't done so already. But for the most part, I'd imagine that a lot of people have already done so. But highly recommend you check it out if you're interested. Obviously, you can have IRAs on multiple platforms, so it comes down to your preference, what you see value in, and if you believe that Robinhood is a great place potentially for you to invest for your retirement. Hit that thumbs up button, consider subscribing, and we'll see you guys in the next one. Peace.